Hi everyone and welcome to another video included in the Zen4Next educational series. My name is Connor and I am the Senior Market Analyst at the company, providing to you daily videos on market analysis and educational content. For today's video I'm going to be giving you a beginner's guide on Japanese candlesticks. And if you watch this channel even briefly, I'm sure you've seen the way price changes are shown on my charts. And if you are new to forex trading, I strongly recommend you watch this video before you dive into any of our other concepts, as it is important you understand how price is commonly shown. I'm going to run through some background theory on Japanese candlesticks, then move on to the chart and show you some examples. Enjoy. So then, just very quickly, some background on candlestick charts. Well, where do they originate from? They originated in Japan over 100 years before the West developed what is known as bar and point and figure charts. And to this day is the most common form of reading price movements in financial markets. And traders often make their own trading decisions based on these. Now, Japanese candlesticks can be used also for any time frame, whether it be the 1 day, the 4 hour, the 1 hour, 30 minutes, whatever you like. Each candlestick is used to describe the price action during that given time frame. Okay, so let's have a look at the components really in a little more detail. So when you open up any financial market, whether it be a forex pair or a stock market, you have a choice, and you could just use a simple line chart, which you can see right here. And I'd just like to point out, I'm on the daily chart at the moment. Just like with any way of reading price action, you can use the 1 hour, 4 hour daily, you can use anything you like. So I'm on the daily chart at the moment. So what this line chart is doing for us is it's marking each point at where the day closed in price, just each of these points along the way. And you get the message. And what this line chart will do is just run through each closing part and just draw that trend line for us, which is really great for showing trends. I can't deny that, as it shows the closing prices for each day. But as traders, I think we want just a little bit more information than that. So this is where you could use something like bar charts, and I did mention these in the introduction of the video. I did mention these. Now let's have a look at a good example, and I'll just get rid of these so you can see a nice clear example at the moment. So each one of these bars is a daily movement in price. So what's this bar chart showing us? Well, at the bottom here it's showing us the low of the day, the low. It's also showing us at the top the high of the day. But more than that, it's showing us these two levels here. These two lines that are sticking out. Now, this line at the bottom is the open. So where price opened that day. And this line up here is the close. So where the price closed for that day. And so the movement in between is the true movement of price. Now, that's good to see on just one candlestick, which is fine. But if I zoom out on this, it's quite confusing to read anything in that. So what people tend to use, and as I said, it's the most common way of doing it, is using Japanese candlesticks. Now, if I zoom in on that same example, it doesn't actually show anything different to what a bar chart would show, but it's just a bit clearer and it's a bit easier to see. Now, you still have the high, you still have the low, you still have the open, and you still have the close price. Now, if the open price is below the close price, then the market body, which is this part in the middle, this will be painted green typically on most charts, and these days you can change the colours to whatever suits you. And if it's for a down day, so the market's gone down in price, normally you will see this red body here, which is where the open is above the close. Now you're probably thinking, what are these? Hi guys, thank you for listening to this video. Just really quickly wanted to touch on a really exciting offer we have on the website. It's a limited time offer, and if you head over to zen4next.co.uk, you will see the offer in front of you straight away. And this is that you can trade forex on a standard account with raw spread plus zero commission. And now Zen4Next is also an FCA and no dealing desk execution broker. If you are interested in this offer, you can get in touch with the team by clicking learn more, or you can simply go to open an account where you can start the application process. black lines that you can see coming out of the body. Now, these are what's known as wicks in the market. Now, this is showing, for example, this wick here that you can see. This is showing that price at some stage in that day did go to this level, but it retraced on itself and it didn't actually close at that level. So the true movement is the body of the candle, and the wicks are where price was at some point in the day but then retracted on itself. Now, what you can also get is something called a doji candlestick. Now, that is where the open of the candlestick is equal to the close. So you get something that looks a little bit like, and let's just try and find a nice clear example of that. More common on a lower time frame, but I should be able to find an example on the higher time frame, and you can see there is one already, which is just here, and I'll get rid of all these so you can see it clearly. So as you can see, the body, there is no body of the candle at all. The open and the close were at exactly the same point. The market didn't actually move at that stage. Now, this is generally seen as a reversal candlestick, and I'm going to show you an example of what I mean. So you can see that price was running up. We have these green bodies. This is where price has been bullish in nature. Price is going up, and what you can see now is strength start to wane. So we have this red candle, which is showing that the price is moving down, and then we have this barely movement to the upside, which shows that strength is dwindling, and then we have this doji candlestick where price didn't really move at all. So it's kind of price is hanging up there. Now, if you have a look what happened, if I just quickly play it through, you can see this huge move to the downside from pretty much from these doji candlesticks that we have here. So you can go through the line chart, bar chart, and illustrate really each part, and maybe test yourself to see what you'd prefer to look at. But I know that most traders will use these candlestick formations. Have a look to see if you can spot any doji candlesticks as well to try and spot that reversal. So really, there you have it. Hopefully this has given you a clear understanding of how to read charts using candlesticks. It simply is the low, the high, the opening price and the closing price, and then the body in between. The two lines that are coming out either side, they're known as wicks, and you can get these doji candlesticks that show signs of reversal. Now, it's a very important fundamental to know throughout your trading, and it's something that really will become second nature as you learn. Now, feel free to experiment with other methods like the line and bar charts. However, as I said, candlesticks are the most important, and I think they're the most effective way to read price action on a chart. Be sure to check out our other educational material from the series now, where you'll see me using these candlesticks. And as always, if you continue to like and subscribe to this channel, it is always greatly appreciated. Also, feel free to drop your comments in on anything you spot, and I'll be on hand to reply to those comments as well. Thank you very much, everyone. Take care.